bringing in Robert Reid here. Robert, do I hear you on?
Yes, I'm here. Can you hear me?
Yeah, I can hear you. How's your morning going?
Oh, good. Just pretty quiet. We still have a little light with some analyst coverage with people being out this week, but next week should be back up to normal.
Yeah, we're starting to get into earnings season, of course. You got any early thoughts on the Q4 earnings season? Anything that you're going to be keeping an eye out on?
Yeah, that Apple thing was definitely scary. I guess it wasn't a huge surprise, as some other suppliers have been warning beforehand, but it's definitely a spook. It's not. I think this issues with China are going to be a theme among companies in the first quarter, or the fourth quarter results, and getting ready for the first quarter outlook. It wasn't just Apple. It was, Ford, like in November, I believe, also was warning about this, and paying higher prices for steel and aluminum, and even that warning from Target, a couple months ago was kind of scary as well. So I'm kind of nervous heading into this earnings report overall.
Okay. Any names in particular with that China theme that you've come across in your path, either in GrowX or Yield, that you're kind of keeping a close eye on? You don't have to go into too big a detail for them, but just names, I suppose, with exposure to China that's been in your realm.
Not any particular names in specifics. I'm just more from a macro concern. I think there's going to be some pretty muted outlooks, at least until we have some sort of guidance as to whether these tariffs are actually going to go through in late February or not. It's just kind of creating a cloud over the whole stock market, I think. And I think CEO is going to be cautious when they're providing guidance for the Q1 and for the first half of 2019. So it's definitely just a general concern, and the fact that just China's economy is slowing. A quarter of the world's population's in China, so it's definitely, if there's ever going to have an impact on us if they're starting to slow over there, and then the tariffs aren't helping either. So I don't know. I'm definitely concerned from a macro perspective.
Okay. All right. So moving on to a few names that have kind of stuck out on your radar as intriguing 2019 plays. I would say the first one that you had mentioned to me was Roku. You want to go into a little bit of detail around Roku, and what are some of the things you like about it?
Yeah, this is one that I was really surprised at. I understand the tech stocks sold off in the fourth quarter, starting in October, but this one's gone from like 77 down to 32, so it's just gotten hammered. And I actually like this idea. I know people kind of think of Roku as a hardware play, but they're actually not that. I actually have a Roku TV on my desk here. People think of that as that's what Roku does, but that's not really the crux of the story. The crown jewel is kind of more from their advertising. They make money. They do make money on hardware like a Roku stick and a Roku TV. They do get some licensing revenue from TCL and from other TV manufacturers. But the main part of their growth is coming from their advertising, and they also get a little slice of, for example, if you're on a Roku TV and if you order Netflix through them, they get a slice of that every month from Netflix, because you're ordering it through a Roku TV. And so basically it's kind of a play on just sort of this trend towards cord cutters in general. Especially younger people are cutting the cord at a pretty fast pace, and Roku's a play on it. And they make the argument that back in the day there was mainframes, and then mainframe operating system tried to go to PCs. Well, that didn't work because Windows was there. And then when mobile took over, Windows tried to become the operating system in mobile, and that didn't work either because it's iOS and Android. So Roku makes the argument it's the same thing with TVs. Like iOS and Android, they can try to put their operating systems on a TV, but it just doesn't make any sense. Those, Android and iOS, those phones just sell for up to $1,000, whereas Roku makes a system for a $20 TV. Basically, the TVs don't have the same kind of sophisticated internal processing power as like a phone does. So Roku says its point is that it's purpose-built for TVs, and they're the first ones, and they're sort of the gorilla in the space in terms of streaming. So it's a pretty interesting argument that they make, and I think it has some validity to it.
Okay. Does Roku break out their Netflix sub numbers at all or anything?
They don't do it by they don't do, not as far as I know. They don't do it by individual app. But if you order like Hulu, Netflix, whatever you order through them, they get a slice of that of it. They don't actually break it out by by individual app, but the main thing is the advertising. I'll get into that just a little bit, but basically the advertising component is sort of, I see that as kind of like the crown jewel, because they make the point, like, 10% of the demographics of 18 to 34-year-olds have already cut the cord completely, and they're 100% streaming. But 10% of the ad dollars have not made it over to streaming yet. So a lot of ad dollars are still on regular linear TV, while more and more and more people are going to streaming, and Roku is the biggest streaming play. So those ad dollars are going to be coming over in the next few years in a big way, and that's kind of the main crush of the story. So they get.
Do they break out what percentage of their revenues comes from advertising?
They do. I don't have it in front of me. I believe it's around. I think it's around maybe 2/3 of the revenue comes from non-hardware, and within that they break it out further. But I don't have it in front of me. But the advertising component is definitely it's the fastest growing, and it's the most lucrative part of their business. And if you think about it, it's actually a much more a deeper way to get in touch with consumers, because they can actually add things that a regular TV cannot. Like you can add, click here for more, or if you're watching a Ford commercial, you can click on it and they'll take you to a Ford website. Linear TV advertising can't do anything like that. So there's a lot more stickiness that they can have with consumers, and advertisers love that, where they can get getting closer with consumers. So there's and then they're just sort of developing that, so that's going to grow.
Would there be any thought process in kind of like developing a relationship with Amazon where you could actually just go in and order directly from the website while you're watching TV?
Yeah, I don't think that's possible now, but that's a good example where you can do it, where it's just a lot more interactive as opposed to just a regular TV commercial. Yeah, I think you can do that, and you could probably even set up I don't know if they can do it quite yet, but that would be something that would make a lot of sense, where you just have your Amazon account set up through it. You like something on TV, you say order now, and it just gets sent to you. Something like that could definitely be in the future, something like Roku. That's just not really possible with regular TV.
Yeah, people with bad shopping habits beware, right?
Sure, exactly.
How does it compare to the Trade Desk, TTD?
Well, TTD, I'm not familiar with
another
TTD.
advertising model for streaming,
I think they're more of like a platform for buying and selling advertising space, whereas Roku is they try to be neutral, where they don't necessarily promote like any advertisers over others or other clients over others. So it is a complete. I think it's kind of a different model, where that's just like online advertising, and I think that they create like some sort of just like a supply and demand, and it moves quickly depending on changes in price and demand, and so I think it's a little bit different than Roku, where Roku is just strictly, they do both. Roku obviously does advertising, but it's at a completely different platform with television, so it's a little bit different.
Okay. What metrics would you be using to value this, Robert? Price to sales?
Yeah, price to sales. I don't have that right in front of me right this minute, but
I got it at 5.04.
Okay.
I'm just curious what metrics you would be using it for in terms of trying to figure out a valuation, because obviously they're not profitable yet, right?
No, they're not profitable yet. They're getting closer. I think maybe it's going to be a couple years, 2-3 years probably before they're profitable. But so for now, you probably have to kind of look at it as a price of sales is probably the best, and 5 isn't horrible. It's definitely not cheap.
Sure. No, yeah. Compared to the clouds, it's a little cheaper, I believe, right? Clouds
I believe so. So that would be something I would take it in, but it's kind of more. It's definitely, I wouldn't consider it a valuation play. I think it's more of kind of if you think the world's going to keep moving towards streaming, and Roku is convinced that it is, that more and more people are cutting the cord and going that way. I personally have not done that, but that seems to be the direction a lot of people are going, and it makes a sense for a lot of people. And the thing is, the advertising dollars just haven't moved over yet. Only a fraction of advertising dollars have moved over to streaming, so there's a huge ad budgets that are eventually going to keep moving over to streaming, and that's really the crux behind Roku, is as those ad dollars come over, that's going to be a big bonus for them.
Yeah, anecdotally, I'm one that cut the cord last year, and to be honest, I haven't even looked back. The only time it drives me nuts is the sports are a minute behind, so sometimes I'm getting updates and calls from people.
You can hear your neighbor cheering upstairs, and then you...
Yeah, exactly, so that drives me a little nuts. But outside of that, I've not missed terrestrial TV or satellite at all, so certainly I've missed the bill.
Yeah,
So let's take a look at your next one here then, Robert. GrubHub, ticker symbol, of course, GRUB, another one that's pulled back into a little bit more viable levels, right? What's kind of tipping you off on GrubHub? What do you like about this name?
Yeah, well, GrubHub, everyone's probably familiar with them. They're the largest online mobile platform for takeout delivery, and I kind of just like the model in general. I just really think about it. Like Amazon came along and pretty much changed consumers' perspective, where they want everything delivered to them in 2 days or less. So GrubHub is kind of just an extension of that expectation, where I'm sitting at home and I want a Burger King or I want a McDonald's or a Taco Bell. GrubHub will get it to me. So it's basically it's interesting because those individual restaurants, it's not cost effective for them to have their own delivery person on staff who would sit there until a delivery order comes by. It's just really inefficient. Or maybe your local pizza joint will have that. But if you go into there sometimes, you'll see the guy sitting around because he doesn't have any deliveries to make. Whereas GrubHub is it's sort of like an on-demand delivery service where basically, they just their core competency is just getting food from point A to point B, and they're only brought in when they're needed. So it's a lot more efficient than having somebody on full staff at a restaurant. So it makes sense for these restaurants to do it, and they're even getting into fast food places. In fact, GrubHub just signed a huge deal with Yum Brands, which obviously owns KFC, Taco Bell, and Yum actually took a $200 million stake in GrubHub as part of the deal. So that Yum Brands is really going to be pushing this GrubHub service if they're a part owner in GrubHub. So basically that's like the story, because they're really starting to build scale. The stock has taken a hit in the last few months because their Q4 guidance was pretty weak, and it was weak. EBITDA of just 40 to 50 million was well below consensus. The thing about it is that they're spending a lot more because they're breaking into a lot of new markets, and that costs money. They have to train drivers, they have to spend on advertising. They just kind of have to get that infrastructure in place. Like if they go to Nashville, Tennessee, they need it takes time to kind of build up enough drivers so that the service is, a quick service when people actually do order. So I kind of see as late 2018, 2019 as kind of a time when they're spending money to really build out their network, and then they're going to benefit from that down the road. So I just think that the pullback in the stock has just been a little bit overdone. It's gone from I'm pulling it up now from 149. It's now at 75. I mean, I understand the Q4 guidance was weak, and there should be a pullback, but it just seems too severe to me, and so I think this is probably a decent buying opportunity for 2019.
So let me ask you on this one too, Robert. When you said they announced a deal with Yum, now you said earlier Burger King and McDonald's, they've delivered for them. And it was interesting because I was in McDonald's. I guess I hadn't been there in a while or whatever, but I pulled up to the drive-thru, went through, paid, then pulled up to the delivery window, and they told me to pull around the front, and the front was 4 spots, 2 for pickups for drive-thru, and then 2 for pickups from GrubHub, which is certainly interesting. Now, when GrubHub announces this Yum deal, did they previously announced a deal with McDonald's or Burger King, or is that a franchise thing? Do they have to go? Can they do a corporate-wide, or do they have to go to each individual franchise?
That is a good question. But then again, Yum brands, I believe, aren't KFC and Taco Bell, a lot of them are franchised, or are they owner-operated? I'm not totally sure.
I'm not 100% sure on the breakdown of each one, but I'd just be curious if that was a franchise thing or if it was a corporate-wide thing. Obviously, it's a lot easier for Grub to do a deal corporate-wide rather than sending in an individual to each store, right?
Yeah, that's true. That's true. But also keep in mind, a lot of franchises are actually multi-franchises. They don't own just one McDonald's. They might own 10 to 15 McDonald's. And I believe that is the case actually with Taco Bell. Now that I'm thinking about it, where so you could necessarily negotiate with one franchisee, but they might own multiple locations. I doubt they have to go like on a restaurant by restaurant basis. They do have probably a good way to do it that way. But Yum is a little different because Yum is actually going to be I think GrubHub is going to be the exclusive delivery for Yum brands. Whereas the McDonald's, I think they have Uber Eats and they have GrubHub. They have multiple services. Whereas Taco Bell and KFC, I believe, is only going to be GrubHub only. It's going to be an exclusive thing. But basically they have it's going to be a huge. They're adding on a bunch of those restaurants, in the second half of 2018 and then also into 2019. So right now they're going through a lot of costs, and the performance isn't that great at the moment. But I think it's going to pay off later in 2019, and I think it's a good investment to make. I think the stock has just gotten decimated, and I think it's just a little bit overdone in my opinion.
Okay. And then the third name you have here on the list, Robert, is AMPH Pharma. AMPH. Now, you have this listed as a generic drug maker that focuses on technically challenging drugs.
Yeah.
You able to define technically challenging for me?
Well, they might be, for example, like an inhalation drug is a lot more difficult to produce than a pill, or something, or a nasal inhalation, basically, or a topical kind of drug where it's more difficult to make than just a standard pill. So that's kind of what they focus on more, is just kind of more technically challenging drugs is kind of what they do. And the reason I like it, compared to the other two, probably most people have not really heard of AMPH, but that's why I kind of like it. It's kind of an undiscovered story. They are generic drugs. They do have some proprietary drugs. Their largest drug is enoxaparin, which is like for heparin, that's a blood anticoagulant. And but the main reason I really like AMPH is they just got an FDA approval for, I don't know if you ever remember Primatene Mist for asthma.
Yeah.
It was actually taken off the market in 2011 because of the ozone issues. There was, the environmental problems for it. So basically, they've reformulated it now so that there are no CFCs, and there is no ozone impact anymore. So actually, the FDA actually allowed it to come back on the market, and AMPH owns it. So it is the same active ingredient. It has the epinephrine, which was used with the original Primatene Mist, and there is no ozone impact, but basically, this is a huge win for AMPH. It's going to be the only FDA-approved asthma inhaler that's over the counter. You don't need a prescription to buy it. It's going to be a nice tailwind for them. It actually supposed to hit stores this January, so 2019, 2020 should have some real nice tailwinds behind it, and for this Primatene Mist, which is going to be a huge winner. If you really think of it as the only asthma inhaler you could just buy over the counter, it's a pretty lucrative thing, I think.
Yeah, certainly, and I haven't been following the trends for asthma, but it seems like there's a lot more people out there with it. It's definitely a better looking chart than the other two. The different chart, I would say.
True.
This has been at a pretty steady uptrend since that big dip in May. Any idea what was behind that big dip in May? I'm assuming some sort of FDA reading and breaking that 200.
It's possible. They did. I think they had some stumbles in terms of getting the Primatene Mist approved, or that might have been what it was. I don't have that information right in front of me, but the Primatene Mist is a big part of the story. And that's actually, I did want to mention just real quickly, it also has two other ANDAs that are in front of the FDA, and these are for what are called paragraph 4 challenges, which basically means there's no other generics on the market. So if they did get approved, they'd be the only generic alternative on the market. And the market value for those 2 drugs is $500 million in annual branded sales. So if they were to become the only generic in those 2 markets, that could be another nice tailwind for them too. So just for overall, I just kind of like the stock. It's trading around $20. I don't think people are really following it very much. I don't think people really understand the Primatene Mist story, and I just kind of like it as a little known pharma name that has some good upside in 2019.
All right, beautiful. So let me ask you this, Robert. We got Roku. They are going to be having their earnings unconfirmed yet, but call it towards the end of February. What's the key story going into earnings for them?
Just to make sure their advertising business is healthy. Just not healthy, but just seeing how much it's going to grow. And we're going to get the first outlook for 2019 with that report. So I think it's just going to be, for them, it's just the top line growth. I wouldn't really necessarily worry about profits and margins at this point. They're kind of still in growth mode. And then they're not going to be profitable for a while anyway. So I think it's mainly just going to be, and also how many people are moving over from, how many streaming accounts are they adding every quarter? That's another thing that you kind of don't want to see that slowing. That would definitely be a concern if there was ever a pullback. But from the last 2 or 3 quarters, actually, then the membership numbers have been quite good, and I think the stock has just pulled back too much, and I think it could be an interesting play in 2019.
Okay, GrubHub early February expectations for their earnings.
No,
look out for here.
Well, actually, they're probably something I would probably look at more closely, because I want to see what their Q1 and Q2 guidance is, because what took down that stock was their Q4 EBITDA guidance. Don't expect good results in Q4. You kind of have to assume that that's just going to be a bad quarter. So I wouldn't necessarily worry about that. It's mainly what's their outlook in Q1, Q2. Are their margins going to get back up to more normalization, and what's their outlook just for growth in the second half of the year? And they're kind of going through just some growing pains at the moment, but I think in the second half of 2019 they're going to come out and they're going to be glad that they made all these expenses now. And then just real quick on GrubHub, the other thing is just on the competition. There are a lot of other companies that do this. There's Uber Eats, there's Amazon Restaurants, there's DoorDash. A lot of companies are getting into the delivery space. So, but they seem to get this. I've followed the stock for a while. They seem to get this question every single quarter, and their point is they just haven't really seen any impact on their business, just because there's basically so much white space out there that there's enough for a bunch of companies to do this. And you'll also see restaurants might have multiple delivery services. Might be DoorDash, or you could do Postmates or GrubHub, which is fine too. So a lot of restaurants don't necessarily do exclusive deals. They just kind of sign up contracts with all of them. So I'm not, they sound pretty confident that the competition is not really a big issue for them. So, but we'll see.
Okay, and then I suppose if they come out and kind of tank in Q4 and hold 75, that's going to be a pretty good signal for you, I would think, right?
Yeah, it is. And in fact, in all of these, I would definitely use a 15 to 20% at the most stop loss limit on these, just to protect yourself on the downside. I don't like holding. If something might be wrong with the story, maybe I'm just have a blind spot. Maybe there's just something to the story I'm just not seeing. So I wouldn't, don't hold it down into the 50, 60 range, or it's just not. Maybe there's something else going on that I'm just not seeing, or they're just not publicly disclosing. So, just for all of these stocks, I would just kind of keep that in mind. And in fact, that kind of brings me to, I know we had a feedback on Kemet, KEM. I actually still like the story, but it did fall through the stop loss limit we had mentioned before. But the stock is trading around $16, $17, and I think they're going to earn like $3.35 this year or something like that. So that's a PE of around 5. So it's still pretty cheap. But I do like the story overall, and they have a new CEO coming in. But I'd have to look at the story more closely to kind of remind myself, just to make sure that all the catalysts I mentioned before are still in place. But it seems to be holding that 16 level pretty well.
Okay, and then Amphastar, earnings not until early March likely, but this isn't really an earnings story. I assume this is more about those ANDAs and this Primatene Mist launch.
Primatene Mist is really the thing. And actually, for them, basically how well did Primatene Mist do in that first
Have they said when it's launching?
It's supposed to launch January. It might already be on the shelves now. They just got approval.
So it won't be in this Q4 report then?
No, it will not be in Q4. No.
Okay.
It'll be in Q1. Even Q1, it takes time to get production up, get it on the shelves. Consumers may not be aware it's back on the market, so that takes some time as well too. So it's probably going to be more like the second half 2019, I think, before we really kind of see the Primatene Mist having a big impact. But I think it's a really good story. I don't think people really are following this one at all. It actually came on our emerging growth list, but I'm sorry, go ahead.
Okay. Who should we be looking at on the flip side of this? Who's it going to hurt?
That I'm not certain offhand, because I'm not sure. Okay. I'm not very sure there is anybody out there, because it's first of all it's the only one that's going to be over the counter. So its competitors might be, if there's whoever does like inhalers for asthma that are prescription based. For them, I would probably have some concern to it, but I don't know who that would be just off the top of my head.
Okay, and then finally, Rob, somebody's asking about Six Flags, ticker symbol SIX.
Yeah, I've been a fan of Six Flags for a long time. They just generate so much cash. I mean, the stock got hit in October. I still like it. I think that they're...
Is it on the yield list?
Is it on the yield list, or it might be on the value list? I'm not sure. It might be the yield list.
Okay.
That's one that's I like the drivers in place. I think they have a lot of international expansion room for growth, and they just generate a lot of cash. Plus, they have a lot of room to even increase prices and for their current customers. They're going to more of a recurring revenue model, where they try to get people to buy monthly recurring pass. Instead of spending $30 for a one-time visit, it might be, well, pay $10 a month and you can go as many times as you want throughout the summer. Or they're actually also doing more things in the winter too. At least here in Chicago, they started like a holiday theme. So they're trying to make it more of a year-round experience instead of just in the summers for the northern parks. I mean, their southern parks, I think, are open year-round, but for the northern parks, they want to try to get it more of a year-round thing, and then try to get more people on recurring, where they just pay like $7 or $8 a month, and people don't even care about spending that, and it brings people into the park, and they obviously buy. It's not just they make money on food and drinks and gifts, things like that. But I do like Six. I think the stock has gotten hit with the market overall. I mean, it did dip in October. I assume that's on earnings. But I'll keep an eye on that one. We're probably not going to know what until their high season comes back again in the spring, summer. Then we'll get a better outlook for them. But I do like the story. I think the drivers are still in place, and it's unfortunate the stock's pulled back. But I think it's still a good story overall.
Okay, great. Certainly getting some support at the Psych 50 level here. It looks like that break of the 200-day in mid-October, along with a pretty poor market, certainly helps this downside acceleration. So Six Flags is a name you want to have on your radar, I think. All right. Rob, any parting thoughts there?
No, I think, good trading in 2019. I'm more of a buy and hold investor. I'm not in and out. I kind of look for swing ideas. And these are ones that I think are, they might be down 10% tomorrow. I don't know, but I think later in 2019 they'll have a nice return. But again, use the 15 to 20% tops for stop loss limit. So keep your risk parameters in place. That's always an important thing to remember. But yeah, so it should be a pretty volatile. I think this earnings season will be pretty volatile. So just be careful. We're going to get our first taste of 2019 outlooks in the coming weeks. So, with the tariffs and just, I'm just, with the China issues, I'm definitely going to be concerned a little bit heading into that. So, but hopefully I'm wrong.
Okay, fantastic. Well, Rob, thank you very much for joining us. Always appreciate it. And we'll try to get you on a little bit more regular basis here in 2019.
All right, sounds good. Thank you so much. Bye.
Okay, talk to you soon.